Good morning, viewers. It's Friday morning, February 28, 2025, and I'm your host, Sunil Thakker of Sunny Talks Money. Welcome to ST Money 7 a.m. early morning news, where we provide you the latest, concise, and precise stock market wrap with accurate figures and numbers. The S&P 500 and Nasdaq ended sharply lower on Thursday, weighed down by a slump in chipmaker Nvidia after its quarterly report failed to rekindle Wall Street's AI rally, while investors focus on data pointing to a cooling US economy. A sell off in the stock market's most influential group drove the Nasdaq 100 to its lowest level since November as Nvidia's corporation's results failed to revive the artificial intelligence rally. It was Nasdaq's deepest one-day percentage drop in a month. The S&P 500 fell 1.59% to end the session at 5,861 points, erasing its gains for 2025. The Nasdaq 100 tumbled 2.78% to 18,544 points, while the Dow Jones Industrial Average declined 0.45% to 43,239 points. A gauge of the Magnificent 7 mega cap sank 3%, while the Russell 2000 slipped 1.6%. Chipmaker Nvidia tumbled 8.5%, evaporating $274 billion in stock market value after the Silicon Valley company gave a weaker than expected quarterly forecast for gross margin that overshadowed an upbeat revenue outlook. Nvidia's results and outlook failing to impress investors with high expectations, its stock has fallen almost 20% from its record high close on January 6th this year. Mega caps bore the brunt of the selling as good but not great numbers from Nvidia Corporation disappointed investors. Chip makers Broadcom dropped more than 7% and Advanced Micro Devices lost 5%, pulling the Philadelphia Chip Index down 6.1%. The launch of low-cost artificial intelligence models from China's DeepSeek in January has cooled Wall Street's AI rally, while an analyst report this week suggesting Microsoft was scraping some data center leases also raised concerns of AI overcapacity. In other stocks, shares of Salesforce dropped 4% after the business software seller forecast fiscal 2026 revenue below expectations. Snowflake surged 4.5% after the data analytics provider forecast fiscal 2026 product revenue above estimates. In late hours, Dell Technologies Incorporated gave a bullish outlook. While tech stocks dipped, other parts of the market saw gains. The S&P Energy Index rose 0.5%, tracking a jump in crude prices after U.S. President Donald Trump canceled oil major Chevron's license to operate in Venezuela. Also weighing on investor sentiment, data showed jobless claims jumped more than expected in the previous week, while another report reiterated that economic growth slowed in the fourth quarter. Thursday's data follows reports over the past week that suggested the economy was stalling, fears of which have also put all three major US indexes on track for monthly declines. On the trade front, Trump floated a 25% reciprocal tariff on European cars and other goods. He also said tariffs on Mexico and Canada will go into effect on Tuesday. Viatris plummeted 15% after the drug maker forecast downbeat annual results. Warner Brothers Discovery jumped 4.8% after saying it expects streaming profits to double this year. The CBOE Volatility Index, Wall Street's fear gauge, closed at its highest since December 19 last year. The 10-year Treasury yield closed at 4.284%. On Wednesday, yields settled below 4.25%, logging a six-session downward streak. The 2-year Treasury yield closed at 4.079%, up from 4.071% on Wednesday. Bitcoin traded around $83,000. In currencies, the dollar spot index rose 0.6%, and in commodities, West Texas Intermediate crude rose 2.2% to $70.16 a barrel. Spot gold fell 1.5% to $2,870 an ounce. Investors are now focused on monthly personal consumption expenditure data, which is the Federal Reserve's preferred inflation gauge due on Friday today. That's it for today, my dear viewers. And if you're enjoying our content, please do subscribe, like, and share this video as much as possible. I will see you now on Monday morning. Have a great weekend. In the meantime, happy investing, stay inspired, and remember, it is all about money.